Okay, looks like everyone who's logged in at the moment is here, so I think we'll make a start.
Yep.
Good morning, everyone. My name's Paul. I'm from Smart Business Solutions. I'm an associate. I'll be your moderator for today. Just for those who haven't used Zoom before, you've got use of the chat facility down the bottom on the bottom toolbar there. You can also ask questions in the Q&A. I would ask if you could please any questions that if you could ask in the Q&A, that makes it easier for us to manage and make sure that we answer all your questions at the end. So that'd be great. Thank you. Today's presenter is Shannon Smith. Shannon is the founder and managing director of Smart Business Solutions. Shannon has been advising small and large businesses for over 25 years. And prior to founding Smart Business Solutions 13 years ago, worked for one of the world's leading accounting firms in Melbourne, Prague, Amsterdam, and New York offices. Shannon is a long-term local, having grown up on the peninsula and returned from overseas to apply all of this large company practices to small business. Shannon is extremely passionate about helping small businesses and our Mornington Peninsula community. Shannon is a founding board member of the Committee for Mornington Peninsula and has been recognised as one of Australia's leading tax experts, being appointed to the Australian Government Board of Tax Advisory Panel. You can thank Shannon for the many small business tax incentives, including instant asset write-off, simpler BAS, and increased small business turnover threshold, to name a few. With all the changes we've seen in the last few weeks, Shannon is well positioned to share the latest developments with you. Welcome, Shannon. I'll hand over now.
Great. Thank you, Paul. Welcome, everyone. I guess this JobKeeper scheme, as they like to call it, I don't know if scheme's the most appropriate word when we're talking tax, but this JobKeeper scheme, I'm pretty excited about it. I think it's going to make a huge difference to a lot of our small businesses and really keep our economy going. So I'm really excited. I'm impressed that the government has been able to put this together so quickly and get the legislation. Normally, legislation does not get passed as quick as this, and we still do have some changes coming along. So many of you who are not familiar with how some of the legal framework works, we have Treasury does actually write the legislation. So they wrote the legislation last week after it was passed through Parliament. The ATO is responsible for actually interpreting this legislation and how they're going to administer it. They have put out what we call a Tier 1 response, which came out, the days are all merging now. This came out at Tuesday afternoon, I think it was. We are expecting their Tier 2 response to be coming out tomorrow, being Friday. That I will touch on those points as we go through where we're expecting the Tier 2 response and how that's going to impact. So what I want to go through today, we have a lot to get through. I've had a lot of questions come in, so thanks to everyone who has emailed questions through. I've tried to incorporate those into the slides, and I've got a few questions at the end also if we have time to address those. What I want to cover is, I'll go through a bit the framework, the eligibility, and then also the payment of the JobKeeper payment and what's the risk. Because I've got a lot of content to go through, and you will be emailed after this presentation. We couldn't email it before because Zoom doesn't allow you to download, but we will email out a copy of this presentation, and I do also have some checklists and processes so that you can go through it yourself. So if we look at the objective of the JobKeeper payment, I guess really what we're looking at, if I'm a business owner, I want to get the cash, I want to get it as quickly as possible, but I want to also make sure I get it right. So the whole time through this presentation, that's basically my theme, is how we can get the cash, get it as quickly as possible, and make sure we're getting it right as we go through. So some slides, where appropriate, I will skip over them quickly in the interest of time, but you will have a copy of the presentation after this. One thing I do need to highlight for you from a tax agent perspective, we got quite a very strong message from the Tax Practitioners Board on Tuesday, and we were all reminded as tax agents that we have our code of conduct, reasonable care and competency. What they mean by that is they do not want us to be giving off-the-cuff answers because, especially around the turnover test calculation, so I guess you could say we all have been warned that we are required to do a certain level of work in relation to this turnover test if you don't satisfy it very quickly from, with the March cover. And I'll go through that in more detail. But I mean, when you look at it, what's at risk? We've got $19,500 potentially per employee. So there is a big number. Some of you may have heard from your bookkeeper or your BAS agent who may have actually told you they can't help give you the advice on this because it is a tax law. That was changed late yesterday, last night. I was advised, I think it's going to go through law on Friday, but I was advised last night that yes, your BAS agent will be able to provide you with this advice on whether you pass the tax, the turnover calculation. So if you have been advised by your bookkeeper that they can't help you, they now can help you. Make sure whatever you do, get the facts straight. Don't follow the media reports, headlines, or any assumptions. You've got to follow the law because you don't want to have it clawed back later. Legislative package for anyone that wants to have a look at the details. That's where that all is. But what I want to focus on are what are some of the key considerations that we need to look at. We've got employer eligibility, employee eligibility. We've got some, I'll go through some of the other entities and contractors, the reporting and payment mechanics, and the risk management. Now, one thing that is important to note, there is a one in, all in rule. And this is different from when the draft came out. So basically what it means is once you're an eligible employer, all of your eligible employees must participate in the scheme. Now there is the fine print on that is they must be an eligible employee. And I'll go through that in more detail, but you cannot pick and choose which employees are part of the scheme. If you're in and you're an eligible employer, it's one in, all in rule, and that's very different to what we were advised at the beginning when they were first talking about this scheme. So at a high level from the JobKeeper, we have an eligible employer, an eligible employee. There are wage conditions that need to be satisfied, and I'll go through those in a lot more detail. And then there is a reporting requirement and notifications that need to go through to the Commissioner as well. I'll cover those in a lot more detail too. What's a JobKeeper fortnight? I've just listed these here for you so that you can have a look, but this, if you see reference to JobKeeper fortnight, this is what that's referring to. So employer eligibility, businesses more than less than 1 billion turnover, which will be pretty much everyone on this call, must be able to prove that they have a 30% reduction in revenue over a test period. Does include not-for-profits, although they have a lower eligibility threshold. The ineligible employer classes are federal, state and local governments, government agencies, those that are subject to the bank levy, and if an entity is in liquidation or bankruptcy. So those are the ones that are absolutely excluded. But if we get down to some of the, I guess, the questions that come up is this test period. So if I go through some of the key concepts on the test period. So the turnover test period, and I will be giving you a checklist cheat sheet on this, so that will be emailed out to you, and you can walk through that and fill it out to help you with this. But the turnover test period is any month, and do note, I have to emphasize, this changed in the last few days. So if you did listen to a webinar from someone else maybe a few days ago, or you did read anything from a technical perspective, this did change in the last few days. So the turnover test period, any month between March 2020 and September 2020, or a quarter commencing 1st of April 20 or 1st of September 20. The turnover reduction is based on GST turnover or projected GST turnover. I will go through that in a bit more detail so that you can understand what that turnover is. And the comparison turnover is basically for the same period, comparison period of the prior year. There is an alternative for the decline in the turnover test, and this is going to be applied by the Commissioner where they determined that looking at the projected prior comparison period, it can't be applied, such as a startup or an extreme situation. This is what we're expecting some clarity on and some examples in this, what we call the Tier 2 response that will come from the ATO, that we expect that to be tomorrow, being Friday. This is the area that they will be addressing, because I know that we have, some companies, maybe you've been in a growth stage, so comparing, maybe you are down 30% to last month, but if you compare it to last year, you're not down 30%. So in the legislation, when they did put this through, they actually, Treasury gave the ATO discretion, or the commissioner discretion for these situations, and this is why we are waiting on clarity on this one. So that will be coming out on Friday as well. So how does the test period work? You need to prove a reduction by comparing the revenue with a corresponding prior period in March. And it's designed to basically mirror your BAS reporting period. So if it was June quarter 20 compared to June quarter 19. An update that came through on the 14th actually allowed a comparison irrespective of your GST reporting. So let's just say, for example, you lodge your BAS on a quarterly basis, even if you do monthly IASs, but you do your BAS on a quarterly basis, which will be a large number of you on this webinar. You actually, under the original rules, you had to match it from a month of March or quarterly. You now can have a look and match March this year to March last year, April, and then you've got your June quarter as well. The other big thing that's fantastic, which is why you need to get it right at the front and make sure you get the information that you've got all your projections correct. Once tested and qualified, there's no need to retest. There was talk earlier on that you would have to keep reapplying the turnover test. This is once you're in, and you're in for the whole period. Now, where I've had some clients question on that is, what happens if I actually did have a reduction in 30%, or I projected I would have a reduction in 30%, and all of a sudden a heap of new contracts came in. Let's think of, the distilleries that have reinvented themselves as, to do the sanitizer. Those that own a bike shop, I mean, they're doing a roaring trade now. They may not have projected that. Once you're in, and as long as you can support at the time when you made that assessment, you are going to be in. Obviously, if the tax office sees, because you will be doing regular reporting, the numbers are a lot higher, you may get a question. And that's why it's going to be really, really important that you go through the documents that we've provided, so that you can actually make sure that you can justify that you did do this at the time in which you made that assessment. So what is the projected GST turnover? I've taken some of the bits of the legislation, and I know most people on this call are not going to get as excited about tax as I do with these parts of it, but I'm just going to pull out a few key points, because if you're comparing, say, March this year to March last year, and it's your normal income, and we call it GST, your GST turnover, you call it revenue, you're used to calling it what you have in your say your zero file, and it goes into your BAS. So when you're looking at it from a projection perspective, so if your March this year is 30% lower than March last year, you're in one of those very easy situations, I guess I could say, and it's going to make life a lot easier for you to pass that turnover test and go into the scheme. When you've got to project, when you've got to do the projection, and again, this is the area that we will get more clarity tomorrow from the tax office. So once we have that, I will we'll put a blog up or send an email out with some of the specifics on that. But basically, the keywords that I pulled out of this GST turnover, because in this old GST ruling, it does talk about when you are projecting GST turnover, and this is in relation mainly to those when you're looking at whether you should be registering or not. And so we're using that same terminology. You need to make an objective assessment that a reasonable person, and basically the ATO will accept your assessment if you've got reason to believe that that you've used likely to make, you're likely to made, and on the balance of probabilities. So using calculations such as maybe you've got your business plan that you had already projected out for the year, or your accounting budget, and being able to say, well, actually, already I've had, and I've heard this many times from a lot of clients over the last few weeks, many contracts have been cancelled, put on hold, pushed back later. And so they can very easily identify. What I'm saying to clients is, I want you to save all of that information. I want you to even name those contracts that have actually been cancelled and put those all in a file, because it's not like the ATO is going to come in next month, 6 months' time, 12 months' time. It could be up to 2 years' time. We want to make sure we've got all of those documents at those times. So this is just then, I guess, the terminology on it, but you're really looking at, on the balance of probabilities, what are you actually projecting? And this is going to be really important, especially for those companies that maybe your March didn't drop compared to last year. Maybe two reasons. One, you may have actually got extra sales that you made actually in January, and then they've come to fruition in March, but you know that that's going to drop going forward. So that's going to be quite an important aspect on making sure that you've got that covered. Some of the practical implications of the registration. So most will be on a BAS reporting. As I mentioned before, you can calculate your GST turnover for March, you can do it for April, or you can do it in the June quarter. An employer is generally going to fall into one of the three categories: the yes category, which is the easy one, the no category, or the maybe. And these and the maybes are the challenge. These need to be resolved by April 26 if you want to be eligible for the 2 fortnights that fall in April. So they're going to be the challenge. Part of that challenge will be resolved with absolute clarity tomorrow. I've had, I guess just with my Board of Tax position, I have had a lot of access to people in Treasury and the tax office to kind of know what they're going to say, but until we actually get it, I guess, approved by the Commissioner, none of us can be sure. So based on what I know at this point, so what we know, the yes and the maybes, I guess, assuming the majority of businesses are registered for GST, you'll be registered from April 20. You'll need to calculate or forecast the GST turnover, and the period selected will depend on basically your facts of each business, whether you use March, whether you use April, or whether you use the quarter. As I said before, projected GST turnover needs to be based on facts and all known information allowed for and detailed documentation. I'm really recommending people put as much documentation on file. I often like to say, I'm not sure, I haven't had adjustments against any of my work at this point with the tax office. So I often like to say, I don't know if I've confused them or convinced them, but either way, I think the more information of business purpose that you can have to say, these 5 contracts, and these are the name of the 5 contracts, these were what I budgeted, these are the ones that have actually reduced, the more it's going to be possible. Now, I got this from the tax office, but until we get something tomorrow, it's not 100%, but it just from the discussions that I've had, there may be allowance made. This is the Commissioner using the discretion where the estimate is wrong, but maybe it's only a small percentage, a percentage point as well. But you might have that estimate, as I mentioned before, where you actually estimate that you're actually going to drop because you lost all of these contracts, but all of a sudden some other jobs or other sales come through. And that's what we'll find out more on tomorrow. I was kind of hoping that the reason I delayed having this webinar until today was I was actually hoping we would have had full clarity from the ATO by this time. So can you register during the life of the scheme? Yes. So if you don't satisfy March and you're not sure that you're going to satisfy April, so you actually don't want to make a claim that you're going to be 30% down because you're not too sure, you can actually jump in if you are quite confident life's going along quite well for you. And then you find in 2 months' time that things have dropped and all of a sudden you have met that 30%, you can join at that point. You can't backdate it. So the only backdating is just now where they've allowed us to backdate an extra fortnight because of the speed in which they've had to bring this in. But so if you do decide in June that you are going to be eligible in June, we get to June 15, you're having a look at your June numbers and you think, well, hang on a minute, I am going to be eligible for this. I've looked at all my numbers and it is going to drop. You can then register at that point, but there is no backdating as well. And it'll only commence from the time that you register against that fortnightly reporting periods that I talked about before. So employer eligibility, again, this is going to be what we're hoping for clarification. So when you're looking for the Commissioner's discretion, we're not going to be in a situation where we're going to want to ask, if every single person's going to want to ask the Commissioner. I think that'll be quite a time-consuming process, which is why tomorrow we should be getting this document outlining a lot of their kind of, I guess, situations where they will apply their discretion to it. at the end of the day, the government wants this payment to get out there. They want it to help businesses going, but they want to make sure businesses are doing the right thing. So if you can provide your best estimates and as to why, then it is going to be most likely allowed under the Commissioner's discretion on that.
Sorry, Shannon,
So,
can I just quickly jump in with a quick question? I've just had three questions from the same question. Is the turnover on cash or accrual for the GST turnover?
Well, that's another very good one. We are awaiting clarity on that. What we understand is that it is based on how you lodge your GST now. If you change how you lodge your GST, that will probably be attacked under the integrity provisions. We did get advised that yesterday. So it is going to be based on how you lodge. The question with that, I guess, is your accounting records. Generally, your accounting records should be based on accruals. So it isn't 100% clear, because what we've basically gone back to the tax office on to say is, well, a lot of businesses are operating on an accruals basis, but maybe lodging their BASs on a cash basis. And that's where and this is why the question for those that didn't raise a question, the question may have been raised, is that often in your profit and loss, you're doing that on an accruals basis. It is apparently going to be based on what you're lodging, but we have asked for clarification on that from the tax office. So I think that will come out tomorrow as well. And the main problem being, you may actually sell something in January and offer and record the full invoice in January and offer your customer the ability to pay over 3 months. And you start receiving that payment in March, which really shouldn't be part of your March sales. So it is a very, very good question, and we are waiting clarity on that one. My thought process on that, from a practical perspective, would be to look at it then from a projections perspective. Look at your projections for the coming 3 months. Knowing that your BAS may actually reflect something different, but making sure that you've got supporting documents for that. But hopefully we get clarity on that part tomorrow. So the exercising the discretion, again, a lot of this clarity will come tomorrow, but making sure that you do have all of these facts, and so that you can build the appropriate business case to be able to support why you actually thought you were going to be reduced by 30%. The whole goal is that if the business drops, this payment is meant to keep your people employed and keep your business, in a sense, ongoing, even at a smaller capacity as well. So it should be fairly easy for businesses that have been forced to close. So those in the hospitality and entertainment, tourism, no doubt you've had a shocking time, and it will be quite easy to show that you have dropped by more than 30%. There will be some challenges for businesses with irregular revenue cycles, maybe large contracts, or the time period between activity downturn and actually when you get the cash, as we just talked about then. So I think that's where the clarity on being able to prepare what I would call the business case as to why you're eligible is really, really important, especially when you're talking about $19,500 per employee, and being able to build that business case on it. So if we look at employees who are eligible, they need to have been employed as at 1st of March 2020. And other than those who are ineligible, and I guess, as I mentioned before, eligibility is one in, all in, as far as the scheme's concerned. And don't just assume you need to go through and test on an employee basis. I've got a detailed employee worksheet for you to fill in for each of your employees to make sure you go through that process and ensure that they're all eligible. The last thing you want is to pay an employee the amount, thinking that you're doing the right thing, and then find that they weren't eligible and you won't be getting your money from the government. Or furthermore, you have to repay $19,500 per employee that you got it wrong. So it's really important. So I've got a detailed little checklist. You can list all of your employees, go through all the checkbox, and make sure each employee is eligible on that. I did have a question on this with those employed as at 1st of March. what if they've signed an employment contract to start, they've given notice, and then they weren't physically employed by the 1st of March, but started shortly after once they served their 1 month period with the other employer. I have that in with my friends at the tax office because Treasury actually says that they, as the employee has to be engaged with the organisation. And my kind of theory was, well, engaged would nearly mean that someone who has signed a contract and you have evidence of that as at say mid-February would be engaged because they are committed to start. But I have reached out to the tax office on that one because they did not, it's not clear on that, just to make sure as well. So in employees who are not eligible, if they're under 16, casuals, I'll talk a bit more about casuals. Visa, make sure you check the visa categories. Unfortunately, we do have a lot of those on visas that I know we have in the hospitality who are not eligible for these JobKeeper as well. Employees nominated by another employer as well, and if you're paid less than $1,500 per fortnight gross. So if you pay $1,499 per fortnight gross, not going to be eligible. So that's something that's really important, and that they are not employed by that time. So casuals. Now, casuals is a really interesting one because some casuals are going to get a nice pay increase, which is probably, I think it's part of the stimulus kind of package, but also it's probably the easiest way to administer how do you manage with employees. Now, the critical aspect on the casual employees, the law says it's a person who's been employed by the employer on a regular and systemic basis during the period of 12 months, ending the 1st of March. So they have to have been with you 12 months. And what that's going to mean is there's basically a recurring work schedule and a reasonable expectation of ongoing work. So a situation we have here, just as an example with David, he works 1 week in January, 3 in February, 2 in May. Yes, he was employed. Yes, he's been more than 12 months, but he is not regular and systematic. I've spelled it wrong there. Basically, what we're looking at is someone that works every Saturday for an employer, every Wednesday for an employer, and that's what they're looking at from a casual perspective. What about employees on leave? Assuming the employee makes all of the other criteria, they're not precluded because they're on personal leave. They're on workers' comp and working in reduced hours. They're not eligible if they're not working. So if they're on workers' comp, they're at home and they're not working, not eligible because they're getting another payment. They're getting a work cover payment. But if they're back to work but on a reduced schedule, yes, they're on parental leave. But as long as they're not being paid the parental leave service by the government. So that's the paid parental leave. Another one we get a lot of questions on is contractors. Genuine contractors are not employees. So if they are not employees by the definition of Fair Work Australia employees, they are not employees. They may be eligible, and I'll touch on this shortly, they may be eligible to claim in their own right as a sole trader, or if they're contracting through an entity, they'll be able to claim through that entity, and just be really sure not to include them by error. Again, it's $19,500 per employee, potentially over a 6-month period that you do not want to be paying back. And if they think you've intentionally done it wrong, there'll be penalties and interest on top of that. There is a risk of also exposing the employer to other employee liability. So if you do bring them in under this front and they're a contractor, you're going to have, super payable, work cover payable, potentially payroll tax. Employees on fixed term contracts are still employees. So if they're on a fixed term contract, they're on a full time, as long as it's an employment contract, it's not a contractor situation. So going around to then the payment side of things. So employees must be paid at least $1,500 per fortnight before tax. If the employee is paid less than $1,500, you cannot make a claim. So you will need to top up some of your casuals, if that's the case, or even some of your permanent part-time. This may result in them being paid a bit more, and the employer must pay in advance of the claim. Now, this is quite a challenge. I know for some businesses, especially if you're shut, where are you going to get the money to pay those employees? That is a requirement to get the scheme. However, speaking with some friends at the tax office yesterday, I believe there may be something coming out on Friday in relation to this, on how they're going to do that. So I believe on Friday they may be addressing this because they understand that this is quite a challenge for some businesses. There is suggestion that you could use bank funding for that or an overdraft to get that money, but until I'd wait until tomorrow and let's see if something comes out on that. But I believe there may be something on that because that has been a big challenge. So what about if an employee was stood down after 1st of March? They can still be eligible provided they paid the $1,500 and you start paying that from the 30th of March. There is, in this month, we're allowed to backdate the fortnight. So normally you're going to only be able to claim for the past fortnight when you go to the tax office. In this instance, because of the delay in getting this started, you will be able to back pay the whole month of April, and so you can back pay it to 30th of March. There is no requirement if you stood them down middle of March and there's no requirement for you to pay anything to them between middle of March and 30th of March on that. What if you terminated the employee after 1st of March due to coronavirus? You can rehire them and you can then start putting them through under the JobKeeper as well. So some of the actions in relation to employees, you've got a JobKeeper employee nomination notice that's now available. I'll cover that in just a bit later in the presentation, and we will also give you a copy of that as well. Potentially eligible employees, look at those who have been stood down, who earn less than $1,500 a fortnight, or who may have been terminated. Have them complete this form and return it ASAP, and they need to then have been paid 2 times $1,500 by the end of April for the employer to be able to claim against them. So make sure, and then making sure that you've actually gone through all the different eligibility criteria, which will be in this spreadsheet that we'll give you that you can fill out. So some of the interaction that we've had.
Sorry, Shannon, can I step in? Because I've got another one where there's a consistent question from a few people. So people are asking with the casuals or part-timers that have paid less than $1,500 a fortnight, are they still eligible? But they're still getting a pay rise. So I guess the answer there is that you have to top up their pay to $1,500 to therefore make them eligible.
Correct. Yep, that's correct.
Yeah. So
yeah, but make sure with your casuals, make sure you consider when you get the checklist from us. Make sure you consider that the work that they've been doing has been regular, so it's been every Saturday, or it's been and it's not been like that example I gave earlier, just to make sure that you actually do qualify, the casual does qualify. Because once you pay the employee, and on that side it would be then your error, you cannot get that money back from the employee. Now the interaction with superannuation, where an employee is not working but receiving the $1,500 JobKeeper, you don't have to pay it. Where they're working and receiving the $1,500, you do need to pay it. So if they are physically working, you do need to pay it. And if they're getting paid, where they're working and in theory getting paid less than the $1,500, but they're receiving the top up, as Paul just talked about just now, you only have to pay the super on the top up. When I look at these situations, I think I would just be getting them working for my $1,500, I guess, in a sense, if you've got things that need to happen around the business. You know, if they're getting paid for doing the work, they may as well be, I guess, working on it. We then have eligible business participants. So they've called it eligible business participants. What we're saying there is this is to extend the JobKeeper to those people who are actively engaged in their business through either a sole trader, partnership company, or trust, but they're not actually employed. So a lot of our clients may also be getting distributions from a family trust, dividends from a company. They are eligible for this scheme, provided that they're actively involved in the business. They satisfy all the other eligibility criteria, and that they're also, they're not eligible if they are a permanent employee of another employer. And they can only nominate themselves for one business. So on that, with the sole traders, they're eligible to participate. They provide their ABN, their details. They need to meet the same business reduction test as well, and they can also then receive the 1,500 a fortnight too. On the other entities, so with the other entities, what they've actually got, you can only claim with the company one active shareholder or one active director, which is problematic when you might have a husband and wife working in the same business but not getting paid a wage, but we can only do one. The same with the trust and the same with the partnerships. It has to be a business, so this can't be an investment trust that you've got that's just holding investments. It actually has to be engaged in a business. So the registration process, now this is important. There's many of you who probably think, I've already registered. You actually haven't registered yet. You've expressed your interest in registering. It will be available from the 20th of April. Let's hope that the ATO website's ready for it, unlike what happened with MyGov the other day. But you will be able to register and fill out the application from the 20th of April. It needs to be completed by the 26th of April to get your May payment. So that has to be done. So next week is going to be a crazy week for a lot of business owners to get this organised. Make sure you've determined the employee eligibility, and provide all employees with a JobKeeper employee nomination notice for them to complete. We will email this out to you and return to you, because that is one of the criteria when you put in the submission. So by the 26th of April, you need to have that signed document from that employee. Otherwise, they will not be an eligible employee, and then you will not be able to claim for them. You don't need to lodge it, but just hold it on file. You need to have it there. You can apply for the JobKeeper payment on the ATO business portal from 4th of May, and that's when they're actually going to start physically doing the payments on it. You must advise your eligible employees in writing that they have been nominated. This is to make sure that employees, things don't get confused and they get nominated under 2 employers, because they're only eligible under 1 employer. And so I do have a template letter that you can put on your letterhead and give that to your employees to make sure that from a legal perspective, you've got it right and you don't have an issue. You need to do that within 7 days. The theory on that is that if the employee receives 2 letters from 2 different employers, they need to go back and advise one of them to change that. There will be ongoing eligible employee reporting. So this reporting, this is not 100% clear to us yet, and I think they're all still trying to work it out themselves. But as soon as I have more clarity, we will put something up on our website. You will select employees from a pre-filled single touch payroll payment report. You can manually enter the details online with the ATO, or you can do it through a registered tax agent. Again, they haven't told us yet exactly the fine print, but I'm sure that'll come in the next few days. You will need reconfirmation each month that the eligible employees have not changed, and it can be completed online or through a registered tax agent. Now, I do know that Xero are working 24/7 at the moment to actually create a JobKeeper section of the payroll in Xero. There is a workaround we can do at the moment, but going forward, so that when you lodge a single touch payroll, it will report to the tax office exactly the JobKeeper payment. So that is coming very, very soon. They're working away on that. I haven't heard that MYOB is doing one. I have seen MYOB release a workaround that you can do as well. There will need to be a monthly JobKeeper declaration report, which will be you advising of any changes in the employees, and also you do need your turnover as well. So the payment mechanics, payment to the ATO within 14 days, paid by the ATO within 14 days of month end, commences at the beginning of May. Eligible in payroll periods are every 14 days and commence 30th of April. So you're basically getting paid at the end of the month after two rounds of pay run. And you will need to, single touch payroll will be able to give that to you. Once Xero updates theirs, it's going to be really easy for everyone, because they're going to have a special category so that you can actually put that into your Xero file and know exactly what part is the JobKeeper versus what is your additional wages on that. So Yeah, so the transitional payment rule for April, as I was saying, that you'll get the payment in May in respect of April. There can be an advance payment made where eligibility has not been determined yet by the Commissioner. So these will be in those really big maybe situations where you actually may have to contact the Commissioner on it. I'm suspecting tomorrow is going to hopefully clarify a lot of that anyway. If there's an advance payment, they may claw it back. So the monthly reporting, there'll be a JobKeeper declaration report, and you must report your GST turnover for the reporting month and the projected GST turnover for the following month. So that will be your ongoing reporting requirements. It does not affect the turnover test eligibility. So once you're in, you're in. You may actually win a few different projects. You may actually go into a different sales market opportunity, and all of a sudden you're earning a lot more than you had anticipated. And that's actually okay, provided at the time you did the turnover test, you have all of that information available about why you thought you were going to be reducing. This, what it does mean is it will give updated information for the ATO from an audit perspective. So if you've projected that you'll drop by 30% and all of a sudden you've doubled or something like that, I'm sure you'll be getting quick questions coming back very quickly. It won't be someone personally checking this. It will be automated computer systems that will just run analytics through it. So this is why I say it's really, really important to make sure you have all of the information at the time when you apply and have assessed your turnover test to be 30% lower, your projected revenue to be 30% lower. So what's the risk? I mean, it really is a great scheme. I think it's really going to help us through this time, but the dollars are really great, and it's a big benefit to business, but it is $19,500 per employee. So if you've got 10 employees, we're talking about $195,000 over a 6-month period. 20 employees, which I know I've got a number of clients with that, you're talking about $390,000 over a 6-month period. So I really want you to use the checklists and things that we're giving you to make sure that, and I would just prepare the documents, and it's going to take you a little bit of extra work now to do it, but you'll thank us later. Prepare the documents as though you're actually going to be submitting them to the tax office, as though you're sitting opposite that tax auditor who says, prove to me that your income, your projections are correct and that you will be down 30%, because you've really got to be in a position to show why that situation. If you do have an employee that ceases to be eligible, so they cease employment during that time, make sure you notify them. Don't keep that coming in. Make sure you notify the tax office on that as well. So getting it wrong, the ATO is absolutely going to come calling. They will. So what I suspect, they have a risk engine. The ATO have a risk engine. So what it does is it filters through various different data. If I was them, what I'd be looking at is I'd be saying, well, what's your March BAS 2020? What's the 19? What's your variation? And they'll flow through that. So you may still get an automatic please explain letter where your BASs don't stack up when you're for 2020 versus 2019. You may still get that please explain letter. Don't panic, because if you've filled out all the checklists, if you've put all the supporting information, we send that back into them and say, well, here was our projections, here was our accounting budget, here's what we expected. And you know what, things went better than expected. So I think that's why it's really important to have that at that time. The joint and several liability. This is a really, really interesting one. So what I think is great about this is that if an employee provides false information, so let's just say, because generally speaking, you can't get money back from an employee once you've paid them. But let's just say the employee accidentally on purpose forgot to tell you they've actually got the JobKeeper from 3 different employers, and they're only allowed to have it with one. The employee, so the tax office may come to you to get that money back, but the employee will be liable for that. So they can go after that as well. This also does come down to the integrity provisions on making sure that people aren't, making up situations or creating employees or scenarios as an effort to try and get that. So the integrity provisions will actually come in and look at that information. There will be data matching going on as well, which will be the automatic penalties. If they do find that people have done it with an intent to actually get financial advantage by deception, I mean, the worst case scenario is up to 10 years imprisonment. You've got 75% admin penalties. But if you genuinely have your supporting documents to show that you really believe that you were going to project a 30% drop, and that's going to be supported. They may challenge you on that, but I think having that information up front is really going to help support your case on that one. So record keeping requirements, critical, because it's always the devil is in the detail and making sure you can support it. So your prepayment requirements, got to be in English. I don't know why they remind us of that, but anyway, must substantiate all information provided. So that's why I was, saying we really need to make sure you've got all the information to justify why you expected that you were going to have a drop. The ATO will determine some of the formats of that, and some of that's coming in this next week on the reporting that we're going to need to do. Post payment, so once you've got your payment, you are required legally to retain the records for 5 years. So they can come up to 5 years' time and question you on this. Again, going back to why I want you to make sure you've prepared all of the information. If you don't have the records, so the ATO contacts you in 2 years, 4 years, 5 years, and you're like, I don't have those, I don't have that information, sorry, they will deem you instantly ineligible and you will need to repay every single cent of it. So it's a lot of money. So spend those extra few hours just getting the information now that'll help you in the long run. So some of the key actions that you've got to do next week. None of you have a weekend coming up. So are you an eligible employer? You will get a file from us, checklist, JobKeeper eligible employer, eligibility. I suggest you go through our list, add all your supporting documents, put that all in a file so that you make sure you've got that. Go through your employees eligibility, again, making sure that you get that completed form from them as well, and then register with the ATO. So it's not the expression of interest that you've already done. You'll probably actually get an email from the ATO saying, thanks for your expression of interest. You can now register from the 20th of April. So make sure you do that. Next step on how we can help. I mean, obviously everything that's going on with COVID-19 is a crazy time for everyone. So we're not here to create heaps of extra work for us at all. What I want to do is help where possible for clients to get through this. And so we're giving you a heap of checklists and DIY. And for the majority of you, you will be able to DIY yourself. And that's kind of our goal. If you do need us to help you, we are happy to help. We do need to do the reasonable care and competency, and I do have wages to pay as well when I get the team to help you. And so if you do have one of those grey areas that maybe I do need to call a few favours on my tax office friends, we are talking about $19,500 per employee at risk. But my goal is through all of this COVID-19, with everything that's going on, I've really tried to enable clients, and you would have seen it from our website with a lot of the information. We really want to help you try and get through this as cost effectively for you as well. So if we can help you by giving you some of these checklists so that you can do it yourself, that's a good outcome for all of us. But if you do need assistance, yell out. We're happy to help on that if you do have some of these grey areas. But none of the grey areas are something that we can just off the cuff give that answer. And I guess we all got that warning as tax agents on Tuesday to remind us of that, because the situation that from our side is, if we say yes, you're eligible, and we don't have supporting work papers, and the ATO wants you to repay $19,500, I know who you're probably going to go and pick up the phone and call if you had used our advice and we hadn't given you a document with that. So some of our upcoming webinars we've got tomorrow on core values development, which a lot of you would have seen with your team members. It's been an amazing time with a lot of our employees and working together through all of this time. Zero payroll refresher on Friday the 24th of April, all the tips and tricks and everything, and business plan. So during this whole time with COVID-19, do nothing should not be an option. Now is your time to keep you get business continuity plan. I reckon the biggest focus should be on your client continuity plan. Just because your client's not buying from you now, or your customer's not buying from you now, your restaurant's shut, keep in touch with your customers and your clients and keep that connection going. Another update, by this time we'll all need a time to celebrate. We had to postpone our Bite conference, so that'll be the 28th of October. So we have like over 25 questions. Okay, so we have a lot of questions, and if I don't get to answer them all, I did actually have a few extra questions at the end of the slides that I will then answer, and we can send that out to everyone. So did you want to go through, Paul? I think you've kind of grouped a few of them.
Yeah, I think we can get through a few of them hopefully pretty quickly. So we're a small partnership over with only a turnover around 70,000. So if you're not registered for GST, are you still eligible?
That question is, we're hoping to get clarity on that one tomorrow. Okay. The reason for that is that you've got, so if it's a partnership, you should be eligible, provided, under the rules now, they're basically saying, provided you've lodged returns with the tax office. So the GST turnover is just a clarification of the revenue, but provided you've lodged returns previously with the tax office, then you should be eligible under the other business participants. But if you haven't, that is one question where there are some clients that fall through the gaps on that one.
Okay, the revenue test has to be compared to the prior year, that relevant month period. Is that correct? It can't be from one quarter to the previous quarter.
Yeah, it's supposed to be to the prior year. And you can look at it for month of March, month of April, or the quarter April to June. The challenge situation for that, and I think that's probably with a lot of our clients, is they've been growing over this last 12 months. So they're always going to be more than last year. This is the clarity that we're hoping to get tomorrow with the Tier 2 response from the ATO. Hopefully we get a common sense approach coming out, which I believe we will be.
Yep. So if a business has stood down all their employees on the 24th of March, do they have to pay them in April to qualify, or can they commit to scheme in May instead? I guess they can commence when they want, but I guess you'll have to pay the employees first, which I think is going to be the big problem. Yeah. So you'll pay them in May and get it in June. You know, get all your paperwork together. You may as well get them paid for April. Again, we may, rumour has it that we may get an answer on that payment part tomorrow. I'm not sure how actually the ATO can allow that because it's part of the law. So we'll see what happens on that tomorrow. Okay, if you have a part-timer and you're paying them $1,500, can you top that up with annual leave payments, paying out accrued leave? Yeah, so they can be getting the payment. They can be getting the JobKeeper payment and leave at the same time. Yep. For casuals that test for regular and systemic work, does this need to be for the full 12-month period prior to March 2020? We actually don't, they just specify that they have to be employed for 12 months and that you have to show that there was regular and an expectation of work. So I would say, let's just say they've been employed for more than 12 months and they used to work different odd hours, but in the last 5 months, they've worked every single Saturday. I would suspect that you would be able to say that there's 2 points. One is the regular and systematic, and the second, let me just quickly flick as to what that law was. They actually said that it needed to be, and I think it's an expectation that there would be work. So basically that as a result of it, there was a reasonable expectation of ongoing work. So if you've got a reasonable expectation, so if you can show that there was a pattern for the last period of time, that there was a reasonable expectation they would have been working, then that would satisfy. Have we got any is there clarification just regarding the JobKeeper eligibility for apprentices? For which, sorry? For apprentices, are they eligible under the JobKeeper? Because obviously they're already getting some additional. Yeah, so you should be already getting it under the apprentices. That bit I'd have to check. I don't believe they are, but I'd have to check. Okay. I think we've talked about that annual leave and employees on annual leave and long service leave are eligible. We've spoken about topping up part-timers to the $1,500 to make them qualify and be eligible. Sorry, just going. So we have a director in the business and one other person who are both active in the business. Both these people are paid through the trust as from trust distributions. Can the director be included in the JobKeeper and the other person covered in the trust? I guess the answer is no. There can only you can only have one person.
Yeah.
Sorry, just there's a lot of questions trying to get there.
Yeah.
With the casuals that are eligible but haven't worked or been paid, do we have to back pay them now? So the answer is yes.
Yeah.
If they're to get them eligible. How do you apply the one in all in rule where an employee might also be eligible to receive the JobKeeper from another employer? Is that where an employee will will let you know that they've been applied somewhere else?
Yeah, so the employee should know, and then the employee will be ineligible, and therefore you're still applying it to everyone, but they're not eligible.
Yep.
So what they're saying is you can't pick your favourite employees out.
Is the ATO still taking an inclusive approach, as in looking for reasons to include businesses rather than exclude?
Absolutely. And that's why we're expecting tomorrow, they are aiming, their goal is to help all those businesses that legitimately want to keep the business going and keep the employees. This is a key for the economy. So yeah, absolutely.
When projecting, do you include the ATO cash boost?
No.
Are companies
the ATO cash boost is not assessable income.
And not included in GST turnover.
Yeah. Yep. The JobKeeper, just so you're aware, the JobKeeper is assessable income, but you're getting the other side, the deduction. So it's going to be an in and out because you're getting the other side coming in. There's no GST on that. Yeah.
Yep. Are companies which are in administration rather than liquidation also excluded?
I would have to look at the fine print on that because I believe it says liquidation. I'm not sure. I don't believe it actually, I think that they may be eligible. I need to have a look at that because I don't believe it addresses on administration.
How long is the April backdate available for? If you register by 30th of April, is that allowed? I think it's the 26th, is it? Or?
Well, yeah, so it basically has to be all done before the second fortnight. Let me just get the exact date of that second fortnight. Yeah, so it's the 26th of April is the second fortnight. So it has to be done by then.
Yep.
Otherwise you miss out. It's only for the month of April that you're allowed to do 2 fortnights and then, and backdate. Otherwise going forward, there's no backdating.
I guess this goes into with the one in all in. If you don't wish to reinstate a particular employee, do you still have to offer them to JobKeeper? Like you have to reinstate an employee?
No. If you use this as maybe if you don't want to reinstate them, then you don't have to reinstate them. No.
The $1,500 per fortnight for each employee from 1st of March is it's just from the 1st of March 2020. It's not the last 12 months. So.
Sorry, what's that one? The 1,500.
So the 1,500. It only starts from the 1st of March this month. Last month. Last 2020, I think is the. Sorry, I'm not.
The 1,500 fortnight. So that's the payment from 30th of March onwards to be eligible. Prior to 30th of March, you may have only been paying them $200 a week, but to be eligible for this scheme, you'd have to be paying them $1,500 a fortnight.
I've got a question here. Why would you bring a terminated casual back? I guess it's if you want them still in the business and to maintain that connection, similar to that last answer that we had.
Yeah. I mean, if they're terminated and you're terminated, you don't want them back, then there's an answer for you. But if you do want them ongoing, yes. Yeah.
If we top up the 1,500 to the normal salary, do we treat the JobKeeper as a subsidy and therefore accrue pay all benefits and super?
Yes, actually, with the JobKeeper, because the goal was to keep the connection of the employee with the company, All other entitlements under your fair work, such as annual leave, etc., all still continue. So you are getting that subsidy. That's why I say I wouldn't have them sitting at home doing nothing. I'd have them doing working, at least working for the 1,500. Yeah, so, you know, yep.
I've got a question, should we move from monthly to a monthly BAS rather than quarterly? I don't think there's any benefit there.
No, and also actually under the integrity rules, they say if you move as a means of maybe helping yourself more on this JobKeeper, that could be a problem under the integrity rules.
How does the timing work for the pay work? So example, if you've got 3 pay periods in for the fortnight ending 3rd of April, 17th of April and 31st of April, do we need to top up the pay on the 3rd of April?
It's it doesn't matter what pay period you have to use the tax officer's fortnightly pay period. It's in that period is what that they measure. So it might mean you have to slice and dice your pay period when they don't align with the tax office, because it's the amount that you paid in the JobKeeper fortnight that they've listed on my earlier slides. You'll get a copy of the slides.
Are permanent residents eligible?
Yes, yeah. So there is permanent residents are eligible, and then just the one visa class, a special visa class, and the 444 visa, which is generally New Zealand.
If an employee earns more than 1,500 a fortnight, is the employer required to pay the shortfall in their pay to the total amount that they're usually paid?
Only if they're still working. So it's a subsidy for you. So let's just say you normally pay them 2,000 a fortnight and they're working at, you know, normal full capacity, then yes, you would pay them still 2,000 a fortnight and you would get 1,500 subsidy. If they're sitting at home not working, then you don't need to do any top up. You just pay the 1,500.
Just a question, any further details on sole traders, or will it be clarified tomorrow? I think sole traders are eligible.
Yes, yeah, the sole traders are eligible, and you apply the same eligibility criteria. I have a little section on our checklist, so you can have a look at that as well.
Can you back pay a whole month's pay for April for casuals once we have greater clarity about being an approved eligible employer?
Yes, yes. In this case, you can. Yep.
Has to be done by the 26th, does that?
26th of April.
Yep.
Yeah.
Okay, starting to reduce these questions down. Can an employee opt out of April and May and then opt in for June onwards? I'm not sure why you'd want to, but can you opt out?
They may opt out. Maybe they're covered under someone else or something. So then they wouldn't be an eligible employee. They may not have signed their form. So if they haven't signed their form, they're not an eligible employee. 2 months later, they sign that form for you. So you could use it like that.
What about casuals that have worked for several years, but each year take a lengthy break of up to 12 weeks?
I would still go back to those 2 points on being able to justify that it was an expectation of work. So maybe they take a break of 3 months of every year, they work 9 months of the year, and as long as that period that they normally would work would be this period that is actually covered by the JobKeeper. So I would be making sure that there's that link.
How is annual leave accrued during the JobKeeper period?
Just under the normal, I guess. If they're at the 1,500, I'm assuming that you'd have to do pro rata. That's a good point as to whether I would have thought it would have been at your normal rates, but that may be a HR type question. I'll find out.
The employee is a casual employee working 3 hours per week and has another part-time job where the company is still operating and not offering the JobKeeper. Are we able to put our casual employer on the JobKeeper? Is he eligible? I guess the answer is yes. I
believe so. As long as they're not, I think if you've gone through the eligibility, they can only get it with one employer.
Yeah, so as long as they meet the other tests, the fact that they work
the other tests,
shouldn't affect it, I don't think.
Yeah.
For April, do we pay both fortnight periods in one go, given that we're only just receiving information now and tomorrow? So yes, the answer is you can back pay up to the 26th.
Yep. You've got one question here about whether someone's son is a casual employee, he's been with them for over 2 years, and they're not running that program, and they've told them that they're not entitled to the JobKeeper. There's actually no legal requirement for an employer to apply for the JobKeeper, and so they've in this case they've told him to go for the job seeker. Yeah, there's nothing much if the employer may not be eligible to the JobKeeper. They may actually fall under one of those ineligibility criteria. Maybe they get certain funding, something from the government. So that may be why the employer's not eligible.
Is it best to wait until you're approved or until you back pay, or?
So with the approved, you're kind of nearly self-assessing that you're approving, a bit like when you lodge your tax return, you do a self-assessment and the tax office comes in and checks. That's why I would suggest that you go through the checklist we've given you to self-assess that you are actually eligible. Once you've self-assessed that, then you can proceed with it. But, you know, I know that a lot of people were starting to pay in the last 2 weeks before there was even the law clarified. So you really want to make sure that you're eligible so you're not out of pocket.
If you reduce your hours of a full-time employee, can you make them use annual leave to top up to full salary? So
I guess you could be putting them on leave. I think you could put them on leave for that.
Yeah, they can top that up. Yeah. Directors get the JobKeeper if they're on the payroll. Directors get the JobKeeper like anyone else if they're already on the payroll.
If they're on payroll, I believe.
Just be careful of the integrity rules, so don't just touch someone on now.
Yep. Yeah. Do not. Yeah, they will be checking for people that are backdated and added at a different time. Yeah.
So trust distributions. So if you're receiving distributions, then you may be eligible as the trader, but only one person per entity.
Yep.
Will I still have issues with repaying JobKeeper payments if we're eligible due to April turnover? However, we see an increase in future months compared to last year. Once you're in, you're fine.
You're in. Yeah.
Once you're in, you're in.
So if you have qualified under March or you've qualified under April, you are in that system. And again, that goes back to making sure you've got all the supporting information to be able to justify it.
If I don't have enough work for a staff member to work full time, can they work 1 day a week and the rest is annual leave? The answer is yes.
Yep.
Sorry, a couple of the answers. Twice. What about reduced hours? They worked full time at 80K. Now the business is running at reduced hours and capacity. Do you have to pay them the full salary, or can you pay at the reduced rate at a reduced hourly rate to get to the $7.50 a week?
To get to so reduced hours, they're working at full-time capacity now. So if they're working, so I guess there's no requirement for you to pay them a top up. So if they're working reduced hours now, you can either pay them for the full hours and get the JobKeeper. If that exceeds, if it exceeds the $1,500 per fortnight, you pay them extra because they're working those hours. If they're only working, say, 1 day a week, over those, and it's below the $1,500, you just still have to pay them the $1,500. There's no requirement for you to top up extra and pay them extra. It's probably been the first time in history that we've seen where, from a Fair Work Australia perspective, people have been able to stand employees down in these situations and not have a legal requirement to pay after that. But some of these questions, I guess, on it, if you do have any clarity, questions on it, that might be then HR related as well.
Yeah. Sorry, I lost where I was. If an employee was eligible on 30 March and later gets a permanent job, do they cease to be eligible?
Yeah, so then you would just update the eligibility. So if they're working, let's just say they're working as a casual for you, they had the systematic and it was all justified, and then they get a permanent role, I would be thinking that, and they're no longer working there, I would see that they are, or if their role then goes full-time, they would still then be eligible at that company too.
I'm not sure if this question is related to the JobKeeper, but superannuation is accounted as gross wages for work cover.
So the work cover, we actually don't have clarity on the work cover. Actually, that is one big question, whether so you've got your superannuation side that we have all answered. But does that wage get counted towards the calculation of work cover? Work cover have not advised at this point if it's going to be included in the wage base.
Okay. We are closed during the first fortnight of JobKeeper. We would normally not pay our casual staff when we are closed during school holidays. Do we pay our casuals that we are putting on JobKeeper for that fortnight when we're closed in order for us to qualify for the JobKeeper?
Well, that's a tough one, because I look at it and I think, well, if they've been paid, I guess on that casual, if they've been regularly paid, I'm on the fence on that one, because I'm just thinking that it goes down to if you've actually had a payment, then you are eligible for the JobKeeper. I think you'd have to pay them. I think you'd have to pay them to get the eligibility to then be able to go and move on, or do them from next month.
An employee who is a full-time secondary school student who meets the eligibility criteria of 12 plus months, regular and systematic, but only earned $100 per week, should they be put on the JobKeeper?
Yeah, they get a bonus, don't they? If they're not being able to work now, and or they're, yeah, basically there is a bit of a top-up that they're getting. As long as they satisfy that criteria, that's the key. Make sure they're at least 16 and satisfy all the criteria.
Is there any special paperwork for directors receiving trust distributions to apply for the JobKeeper payments, or will it automatically apply if we pay this person the $1,500 and follow the same rules as employees?
Yeah, I don't believe there's any special paperwork at this point. You've got to fill out all the other documents, but I don't believe that there's any. When you do the application, you will be applying under that. So I don't think there will be. You will have to give reporting requirements each month, but we don't know the reporting requirements. I suspect they'll come out from the ATO in the next few days. They're still working on them, but
Yep.
So you will have a reporting requirement.
Regarding the supporting information for your reduced turnover, if you have an April BAS that is 30% less than it was for the prior year, is that enough evidence?
Yeah, so then that's the easy one. That's the easy case. If you're 30% down in 20 compared to 19 for your March BAS or your April BAS, you're easy, you're in, none of this extra paperwork and etc. needs to apply.
If someone was previously paid $1,000 per fortnight, should you be directing to the job seeker as they under the eligible amounts? I guess you wouldn't, because you'd be topping them up to the JobKeeper if you want to keep them, or if they are already in your business.
Yeah.
If you have an employee who normally only works for, say, $1,000 pay equivalent per fortnight, are you entitled to request or require them to increase their hours to $1,500 worth?
Yeah. So you can ask them to work additional hours, because you're actually asking them to work if you've got that time available. But so it's two kind of separate things. One is, and I know I'd probably be doing that, I'd be asking them to work the hours. I'm sure there's something to be done in the business, to ask them to work the hours. So you can actually work the hours. Once they work over the 1,500, they are then eligible for the JobKeeper, and you can make that submission for the JobKeeper. So it's kind of two different things, but I know what I'd probably be doing if I'm paying someone to do the work.
Casuals that have a permanent other employer who is not giving them JobKeeper, can I put them on JobKeeper, even if they only have one shift? Yes, that's the answer is yes.
As long as you've got that regular and there was an expectation, etc. of it. Yeah.
Can I officially change my full-time staff to part-time to fit in with the 1,500 fortnight?
That's a little bit of an employment law one. You can, I guess you're nearly saying it's kind of you're standing them down for a certain number of hours and bringing them only to the 1,500. So whether you can officially from an employment law change them from full-time to part-time, but you can stand them down for part of that, and you can legally reduce their hours at the moment, but I don't know that you can officially change them to part-time. That's an employment law question on that part.
Can you force an employee to use their annual leave even if they don't want to make up their hours?
I think that's an employment law question, and I think that would probably have a problem with that, but I'd probably check with like a Fair Work or something. I'm not sure on that one.
If you are making employees redundant, can you use the JobKeeper to pay out their notice period?
I'm not sure on that one. I don't believe you would be able to. I don't know that they would satisfy. You'd need to check if they would satisfy that criteria if you're making them redundant, because that probably doesn't go to the spirit of what they're trying to do with the JobKeeper.
If I pay some staff monthly over the 1,500 per fortnight, should we pay them now fortnightly to get the two by payments in that month rather than just the one reimbursement when you do the monthly pay. I think it's reimbursed monthly.
It's
anyway.
reimbursed monthly anyway from the government, first week of the month for the prior month. Yeah, so whatever's easier.
Okay, that's
good job, Paul. 70 questions.
We do have a couple of actual extra questions in the chat.
Oh, there you go. They keep going. Yeah.
There's only a couple more. GST turnover revenue is based on gross income or after expenses worked out. It's just turnover, so it's just your income.
Yeah.
The answer to that one. If an employee accepted 25% wage decrease due to their business turnover reduction, but they still earn more than $1,500 a fortnight, can the JobKeeper be used to top up their pay to their original wage? So the answer is no. It's
well, you can do. Yeah, it's a hard one. You're still going to get the JobKeeper. It's what you want to do. If you've agreed to have the pay reduction, that's fine. There's no obligation for you then to increase that pay.
Yep.
Yeah. So
is the $1,500 fortnight gross or net?
It's gross. So super is on top of that. It's not inclusive of super, and it's not, and it is taxable. So
So you still need to withhold
gross.
PAYG from that stuff.
Yep. Yep.
Okay, I think we've answered the rest of those questions in the chat.
Yeah. Excellent.
Excellent.
Great. Well, I hope you all enjoyed that. There's been a lot going on. It is a moving target. What I am trying to do when we update on our website, we will actually put the date of when it's been updated so that you can actually see it is a moving target. And I do have some information that I get ideally in advance of when some things go out live. So I can't put that up yet, but I'll have it all drafted, ready to go. So yeah, if you do need help after this session, we will get this webinar out so you can watch it again if you want to and go through and clarify on anything. The information that we will send out to you, you'll have here. You've got your JobKeeper checklist, your work paper on your employees. You know, I used to be an auditor, so I love this. So did Paul. Paul did audit for over 10 years, so we love this kind of information. But you want to make sure you've got all of that. This is your ATO nomination notice, and then here's a template letter for you to be able to send to your employees. You want the onus back on the employee to advise you if they've actually been incorrectly getting from two employers, so the liability is not coming back on you. So yeah, thank you very much for everyone joining.
Can I jump in quickly? Sorry. If you're talking to people throughout the day who may be interested or may want to know more, we are holding another session tonight at 7 o'clock. So direct people to our website to register.
Yeah, so there's 7 o'clock.
So if you're talking to anyone, please direct them to our website to register for tonight's session.
Yep, and if you've got any questions, feel free to reach out to myself, Paul, Daniel. I'm happy to help you through it. And yeah, thanks, and have a great day, everyone. And a lot of challenges coming out with it all. But you know, no matter which way people are politically aligned, I think this scheme that they've come out with is really going to help so many businesses and just employees, and keep that relationship going with the businesses. So thank you very much, everyone.
Thanks, everyone.
Great, thank you.